Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is Craig Parry. He's the CEO and president of IsoEnergy. I've been talking to Craig and his group for a while, but I really wanted to drag him in the pit today because this week, as the major indices have sold off, there's been red ink across the board. His stock was one of the few that was in the green. Well, maybe not today as we speak on Thursday, but Monday and Tuesday, IsoEnergy was up while everybody else was massively down, especially the uranium stocks. And this is a uranium story. So, Craig, why don't you go ahead and give us the overview, tell us what you're working on, and then I'll get into my questions.
Sure, of course, Lobo. So thank you for having us on. And I think it's the first time we've actually formally spoken and on camera, so it's worth just taking a step back to talk about who we are. Of course, we're a spin out of Next-Gen Energy. We started the company back in 2016 to continue the sort of extracurricular strategy that we had there at Next-Gen, I suppose, looking in the eastern side of the Athabasca Basin. So my chairman, Lee Courier, of course, the founder of Next-Gen. I was a co-founder there with Lee, along with Chris McFadden. We started Next-Gen back in 2012. Met with great success there with the discovery of Arrow, of course, and we took that company from, we did the initial placement in 2012-13 of about 5 cents a share. We've taken that all the way up to $4.60 a share. Unfortunately, we're back at about $1.30 today in this terrible and tough market that we're seeing. And we, our investors wanted us to focus our time, effort, and money there on that Arrow deposit, but we had other things that we wanted to do because we are uranium bulls, and we saw plenty of potential out in the eastern Athabasca for further discovery. So we stuck to the strategy. We spun the eastern Athabasca assets of Next-Gen out into IsoEnergy in 2016. I moved my family across to Vancouver in 2016 to run the company. And get the thing going. We listed at the end of 16, and we, despite these difficult markets, I think in large part because of the success we've had there with Next-Gen, we've had great support from the markets and investors, and so we've been able to raise a lot of money. We've raised just over $20 million to date to explore and build a portfolio of properties, expand a portfolio of properties out in the eastern Athabasca, and start exploring there. And 3 years into what we've been doing, we've been met with some success, some serious success. We made our hurricane discovery back in 2018. We've done 2 drilling campaigns there now. And as you say, terrible week in the markets here in North America and globally, but we were up on Tuesday off the back of announcing the very best drill holes we've hit there at our hurricane zone in that northeastern corner of the Athabasca Basin. We hit some extraordinarily high-grade mineralisation, 8.5 metres at 33.9% in hole 34, and another 8.5 metres at just under 20% in hole 32A. So, we're on to some of that classic, typical, very high-grade uranium mineralisation. And of course, we're at an early stage. We're a junior company, small market cap, and all of that upside's to come for our investors.
Okay, well, that's an excellent overview, and I'm glad actually that you started out with the people. Doug Casey, my mentor back in the day, he taught me that people was the first P of his 7, 8, 9 Ps of resource stock evaluation. So, yeah. Putting the Next-Gen context on it makes a lot of sense. But of course, the best people in the world doesn't guarantee success. So it's really quite extraordinary that sort of out of the gate you've made this discovery. Can you tell us a little bit more? We don't want to get too technical. Not everybody out there is a geologist. But it's typical unconformity drilling. It looks like what you've hit. It's a flat-lying zone. You have a pretty flat-lying area, the unconformity there. So you're drilling as you go through it. Those are vertical. True width, I guess, is vertical. But
yes.
So how big is it? How wide is it? On the horizontal extent, do you know? How do you know? And what's the strike look like? Tell us about what you're hoping for there, at least.
Sure. Look, the very short answer is no. We don't know how big it is yet because we haven't closed it off in any dimension. I think there's one section that we could say that we've closed it off, which suggests that the typical width of the deposit's about 40 to 50 metres. But we've still got a lot of work to do. I think today we're up to about drill hole 40. So we're at a relatively early stage. It is a flat-lying deposit, typical of those sort of Athabasca unconformity deposits like the giants of Cigar Lake, MacArthur River, and of course Phoenix. I should just say, while you mentioned the team there, we've got a first-rate board with a really an unprecedented track record of uranium exploration success in recent years, with Lee Courier as our chairman, Richard Patricio, Trevor Teeley, Chris McFadden, the chairman of NextGen there as well. But very importantly, we've got a bigger and very, very good technical team, and we were fortunate back in 2016 to have Steve Blower join us. Steve was the head of exploration at Denison. Steve had led the Denison exploration team to discover the Griffin part of the Wheeler River ore body. So, and Steve, we can attribute this discovery to Steve and Andy Carmichael, Justin Rodko on the technical team here. Those guys, they've now got 2 very significant discoveries under our belt in the broader group. Of course, we've got Arrow there. So, I think we've discovered and proven up more pounds than any other group in the last sort of 10, 15, 20 years even. So, they're fantastic. And what that does is give me great confidence that as we test these limits of this ore body and we come to understand it, that they will know where to drill and they'll find it. And certainly those results we put out the other day, a testament to the technical capability of the team. They're a great bunch of geologists, great bunch of scientists. So just on the size of the thing, at the moment it's 600 metres long in terms of strike. It's open to the west. We're getting close to the property boundary. We're only about 50 metres away from our property boundary to the west, so not much room to expand out there ourselves, although we tell Cameco and Orano, who own the ground out there, that we'd love to do a deal with them all day long. So aware of that, and we'd love to encourage them to get out there and drill themselves. We know that they've had some hits over there historically, so we think it continues out that way. And then out to the east, 600 metres of strike extent.
Wait, sorry, let me jump in there, Craig. You're having some smashing success on your side of the border. You don't see a drill rig across the property line? I mean, they're not paying attention?
Well, we know they're paying attention. That's for certain. I think, Orano, 40 kilometres away from us, we've got the McLean Lake Mill, owned primarily by the major owner of that is Orano. That mill is underfed at the moment. It's got 24 million pounds per annum of capacity. It's only getting 18 million pounds going through it right now. So we know those guys would love to own some feed for that. So, but the majors have cut back their exploration budget significantly. Cameco's really sort of slashed and burned. Unfortunately for people in Saskatoon, that's happened. Fortunately for us, though, it means that we've been able to recruit a lot of those good people to both NextGen and IsoEnergy. So, we're not too disappointed about that. We would encourage them to get in and test it. I suppose what we do know about this what we're calling the Larocque trend, is that it's about 25, 30 kilometres long, extends down to the southwest of where we are and up through our property to the east. Cameco, 6 kilometres to the southwest of us, have their Larocque zone. The best intercept they've got historically there was 7 metres at 30%. You come up to their Larocque North, which is across the border. They've had some interesting mineralised intercepts there. And then on to our Hurricane Zone and Hurricane Deposit. And then we've got a second drill rig 2 out there testing some anomalies we've got out in the east of our property. And we're getting, very good intercepts of elevated radioactivity, strong basement sandstone geochemistry, very strong alteration through the sandstone and basement as well. So we think that some of those holes we're drilling at the moment could well be near misses to mineralisation. And then there are other mineralised intercepts on our property out to the east. So I suppose what we're seeing is a big long trend in that Larocque trend that's very fertile. And, we love to use the old string of pearls analogy, but that's how it's shaping up. We think there could be multiple deposits all the way along there. It's certainly looking like that at the moment.
All right. Well, as for the Hurricane Pearl, I mean, there's more there, but just to try to wrap our hands around that, we've got the property boundary on the west. Towards the east, as you say, several hundred meters of strike. But to my eye, it kind of looks like the grades are dropping off to the east. Am I imagining that, or is that just
Yeah, no, I think that's a fair observation at this point in time. Absolutely. As we drill this thing out, and look, we've got a lot more drilling to do before we close it off in any of those dimensions. What we've seen, it was probably a little bit cute, but we named the what we thought was the key structure that hosts this mineralisation, or is the sort of loci of mineralisation. We called it the I fault, as in the eye of the hurricane. And then to the south we've got the J, and then to the north the H faults. What we're seeing now is that the mineralisation jumps around between those structures. So that means we've got a little bit of reinterpretation to do to where we've been drilling out to the east, and time will tell which is the most fertile of those structures in any given zone. So whilst it drops off, we're still seeing elevated uranium, elevated radioactivity, and plenty of uranium out there. So I think there's a lot more work to do before we understand that. But at the moment, the total strike extends about 600 metres. For context, people can go to our website there and look on some of our slides. I've got them in front of me, but we will often put the Phoenix deposit as an outline. As an indication of how much mineralisation and how much high-grade mineralisation you can fit in a small zone. And Phoenix is Phoenix is 70 million pounds. It's Denison's main deposit. I guess attributable, the bulk of the market cap of the company is attributable to that deposit. And that's 350 metres long, on average 40 metres wide and only 5 metres thick, up to 8 to 10 metres thick, but only 5 metres thick on average. So you can fit a hell of a lot of pounds of world-class uranium deposit in a very small area, and certainly we've got that space here. That's the next step for us. Get in and do a lot more drilling and work towards that initial resource at some point.
That makes sense. You could fit a Phoenix inside it. That's a good answer. You have to wave your arms when you say that, but all right, fine. Sure. Okay, so we have drill results pending on the eastern side of the property. You said, are we done for now at the hurricane zone itself, or are there still drill results pending there?
No, we've got 2 rigs going. We decided that off the back of these results we'd extend that program and increase the budget slightly. We were planning on drilling 20 holes. We're now going to drill 24 holes. That adds 1,800 metres to the program. That adds about $400,000 to the budget. And that rig will continue to drill in and around those holes 34 and 32A, where we've had those spectacular high-grade hits. So I suppose investors, people watching us can expect more of the same there as we test a long strike from those holes and around those holes. And then that other rig, that's got a few holes to keep going on that big exploration target we've got out to the east.
All right, fair enough. I do want to ask about the budget, but before we get into that, sure. You have other projects too. Looks like, though, from your press releases that you're pretty focused on this one. Are you looking to explore the others as well, or monetize them, or JV them, or what's the sort of overall corporate strategy here with your properties?
Yeah, good question. So look, I suppose the broad strategy, if you like, is put us. A couple of things for context. Of course, that Arrow deposit, I think what we've found there has confirmed that these basement-hosted deposits can be world-class in size, Tier 1. And, of course, Arrow is, by all accounts, a Tier 1 deposit. It's going to be a large, long-life, low-cost, high-margin mine. And so, basement-hosted deposits can be of serious size. So and of course the eastern Athabasca has never been effectively explored for these deposits. Really wasn't part of the genetic model for uranium mineralisation in the basin. And so explorers typically over the last all of history in the eastern Athabasca would drill their holes and finish as soon as they hit the unconformity. They'd start to look to end the holes. And then those holes typically end within 10 to 50 metres of the bottom of the unconformity. Well, we now know that with Arrow, that these things can extend well below the unconformity and fit a huge amount of very high-grade pounds in them. And we've got the best IP to explore for those. The broader NextGen group that we call upon and we're still part of. NextGen, of course, is a 53% shareholder of IsoEnergy. We've got access to all of that IP and knowledge around basement-hosted deposits and exploring for those. So the strategy is very, very simple then. put your foot on as much of that prospective Eastern Athabasca as you can that's never been explored for those basement-hosted deposits. And where there's mineralised intercepts, get in and test into the basement and look for the next arrows out there. And I really think, Steve Blower here, our VP of Exploration, led that Denison team to discover the Griffin deposit. Griffin's another classic example of a basement-hosted deposit. We think there'll be others out there. They just haven't been effectively explored for. So that's the first part of the strategy. And then the other part of the strategy is that the Eastern Athabasca, of course, all of that money that was raised back between 2005 and 2010 during the last uranium boom, a heck of a lot of that money went into drill holes in the Eastern Athabasca. And then, excuse me, as a sector, we all ran out of money post-Fukushima. People attribute Fukushima to being the problem. I see it as part of the problem. Probably the biggest problem there for us was the Kazatomprom coming on stream and flooding the market with cheap uranium. But we all ran out of money at the same time, and that meant that there's a huge number of drill holes in the Eastern Athabasca that have hit mineralisation that have never ever been followed up. And any one of those holes could be tantamount to a discovery hole. So again, our strategy, very simple. Put your foot on as much of that ground, that prospective ground as you can, and get in and drill around those mineralised intercepts that have never had a follow-up. And, the strategy started to pay off for us back in 2018. We acquired that La Roque East property off Cameco. We paid them the princely sum of $300,000 in cash, in shares, and $20,000 in cash. So we got Cameco to come on board as a significant shareholder as well, which was an added bonus. So for $320,000 worth of stuff, we got a property that had 6 of these mineralised intercepts that had never been followed up.
Very good. Sorry, let me jump in on that. Are you still shopping? Sure. I mean, with the, with the post-Section 232 meltdown in the uranium space, it seems like, this should be a buyer's market. Do you have the wherewithal to do that, and are you looking?
Yeah, absolutely. Look, we've been very aggressive on that front. We, you've seen us do a number of deals over the last couple of years. We'd love to do more and put our foot on more of those projects, even deposits. We're looking to acquire actual deposits as well. And look, the other thing that we've been doing is that we're finding that a lot of those explorers that have been holding on by the skin of their teeth for the last few years are now finally capitulating and letting ground go in the Athabasca Basin. So we've been staking a lot of ground. It's an incredibly competitive process. But we've got a team that we've done a better job than anyone else in the space in staking ground. We actually staked some ground. You'll see a news release from us soon, a very prospective piece of ground only a few days ago. And that, the Saskatchewan government opens that up for staking for everyone at the same time. It's an incredibly competitive process. And we've been able to put our foot on ground against the competition. So we continue to do that, and we'll continue to do that because, ground in the Eastern Athabasca, given the endowment, given the very high sort of prospectivity that you see out there, has great intrinsic value and plenty of exploration upside. But to go back to your original question, I think Hurricane, that will be the focus for us. That's where we get best bang for our buck at the moment. We do have a little bit of assessment credit-driven spending to do on a number of properties. So we'll do that judiciously, and working towards proving up targets on a number of our other properties. But right now, Hurricane is the focus.
Sure. So would you consider JVs on some of those others just to manage the expense, or do you plan to keep 100% of everything yourselves?
Yeah, good question. Look, we certainly, some of our lesser projects that we've sort of that rank down the bottom of our schedule there, we definitely look at JVs on those. There's a couple of areas where we may have to relinquish some ground over time, where we've got big blocks of ground that we can't justify holding on to. We've got one of the things we did do there back in 2017 was head up to Nunavut, and Fission had relinquished a tenement block up there that hosts the Mountain Lake deposit. So this is a uranium deposit. It's got about 8 million pounds of known or historic resources, plenty of exploration upside. They let that go. So for the princely sum of $30,000, we took a helicopter out there. You have to do physical staking, so we physically staked that. And that's a good example of where we'll a creative way of generating shareholder value and taking a non-dilutive approach to financing when the market turns around. That back in 2010, the company that owned that, Pitchstone, had a market cap of about $100 million. So that deposit could potentially be worth that sort of level one day again. So we would sell that or farm it out.
Understood.
Right.
Okay, so back to the bird in the hand then. What are the exploration plans for 2020? What are the deliverables? What could potential shareholders look forward from you from this year?
Yeah, absolutely. So, of course, we kicked off the program back mid-January, and I suppose at that point the deliverables were good follow-up holes and hitting some solid mineralisation. I certainly didn't have it out there that we'd be hitting 8.5 metres at 34%, but there you go. The teams met their KPIs. They'll be looking very hungry come bonus time this year, and rightly so. They've done a tremendous job there. So for us now, very much the focus. We'll wrap up this drill program over the next few weeks. You'll see news releases from us with the scintillometer results from all of those holes as we go here. We put some out the other day, of course, and then assay results will follow over the next 6 weeks behind that. And then we'll sit back, we'll reassess where we stand, how things are looking there, on what the work program over summer might look like. And I dare say, the focus for us will be really sort of resource drill out type work come summer. But we've got about 8 holes left to drill. That's right, 8 holes left to drill on the current program. So plenty of news flow over the next little while as we move towards that.
So you're going to be data dependent there. But given the results you already have in hand, I guess it's really the data that you're depending on is what's the market going to do? What are they willing to support? You don't want to blow your brains out if the market is how to put this technically in the shitter. I don't know. Is that right? I mean, clearly, if the market were positive right now, given the results that you have, it'd be easy to raise money and go drill some more.
Look, and that's a good point, good question. I think you're continuously sort of assessing what you're doing, checking. As Lee Curry would say, you're riding the fences and seeing where the holes are and thinking ahead and all the time as to what the right thing to do is. Of course, we're very well funded. We raised 7 million or 6.7 million back in December last year. We've got 5 million in the bank today. I think we'll finish this program with about 4 million in the bank. So it's not like we need to come back to the market and raise money anytime soon.
Right.
Certainly not.
But that's the best time to do it, when you don't have to. You get
totally
the best terms.
Time to do it. No, you're right. And when you put out results like that, if the market supports it, you've got to
Sure.
look very seriously.
If money comes knocking, I'm sure you won't play too hard to get. But actually, about the summer program, one more question. Is this really swampy ground? Is it better drilled in the winter, or can you work easily there in the summertime, after melt-up?
Yeah, very good question. Look, we prefer to work in winter because it is easy to get around, skidding rigs around. Look, we're very fortunate that it's not too swampy and there are no lakes in the area of the deposit. So we don't need to fly a helicopter or use barges, expensive techniques like that too much. We can skid for the most part. So we're pretty well set up. So, I think marginally our winter costs are marginally lower than our summer costs. So it doesn't really matter how we go about it.
Okay, so the short version is we've got results pending. We'll see how that does and what the market response is, and then you'll plan this summer after that, and we see where the dust settles.
Exactly.
Okay.
And as you say, today's a very tough day on the market. You really got to look at, do we actually need to shut down for the next 6 months and conserve our cash?
Yeah.
I don't think we do. I think things will bounce back strongly.
It's fair enough. And I don't want to get too sidetracked on that. The macro is not really the subject of the conversation. It just so happens, as you and I are recording this, massive meltdown on Wall Street, several days running, we could actually be looking at the beginning of another 2008 style event, in which case you'd be fools to go blowing your brains out in advance of that. Fortunately, you've got money in the bank, you've got results pending. We'll see. But I also just want to quickly say, because we've touched on this a couple times, that is not a sure thing. I want viewers out there to understand that I am not predicting, that the crash of 2020 is going to be the crash of 2008 all over again. We've got Powell ready to jump in with easy money and other central banks there. So yes, it's chaotic. Who knows what's going to happen? There are scary cards in the deck, but I think it's way too early to predict how this is going to pan out. So good for you for being data dependent there, following our Fed's leadership. All right, I'll ask you something else about this market action. You put out 2 gangbusters press releases this month, February. Before the first one, your stock ran up like crazy, like a good 40% before the news came out. Was there a leak? Did you get a write-up from some newsletter writer, not me, or what happened there?
Yeah, no, look, of course, the first thing we did was put out SINT results. And those scintillometer results, the first lot, were looking very, very promising. We back in February 19th of February, we put out some assays that hit 7.1% over 5.5 meters, including 24% over 1.5 meters. So very, very good results. And then so we saw a little bit of a jump in the stock there, not too bad. Then we put out the scintillometer results for holes 32 and 32A and 34. And it's a little bit hard. What we find is that we can estimate sort of within 4 or 5% what those might mean. And what we saw was that I think some of the sort of savvier uranium investors realised the significance of those intercepts, and that's what drove that run up in price. People sort of, and I think it took a few days for people to figure it out. There are guys like Colin Healy at Haywood, analysts that we really respect, who were sort of onto it fairly early and encouraging their clients to buy off the back of that. You could see some of that buying, and I think one day there we saw a very solid spike after we put those SINT results out. Where someone had evidently worked out what they might mean. So it was really the SINT results that drove things, and I think what we've seen is it takes a little while for eyeballs to come back to a uranium story. So that was the story there. And then look, we didn't get the assays till right at the end of the piece. We went into a trading halt, of course, when we got those assays back, because it confirmed what we'd suspected and hoped, but didn't know. And so the only way to handle that is when you've got news that's that market sensitive. You're really obliged to put in place all of the stop gaps that you need to. And thankfully, on this occasion, IROC listened to us and allowed us to go into a trading halt for those 24 hours while we confirmed those results, did the QA, QC, drafted the news release. It was a very busy Sunday and Monday there for us this past few days as we got all of that together.
All right. Well, very good. Okay. Well, that's an excellent overview. I'm excited to look forward to the next round of drill results. I got one more question for you that I always ask all my guests or victims, however you like to look at it, and that is the skin in the game question, right? When I write about a company, I don't want to write about it unless I'm willing to invest my own hard-earned money in it. And, you're telling people to buy your stock. How much of your own money have you put into this deal?
Yeah, good question. I don't know the absolute amount. Of course, it's a little bit complicated because we put in quite, the original capital that went into NextGen was our own personal money, me and the board. And so we own a good chunk of NextGen, of course, and NextGen. So we own, what you see on paper on CEDI, but we also own a chunk of the company through NextGen. And one of the things we do point out to people is that we've never ever had a very low market cap. So it was never, this sort of
penny shares.
Penny shares, none of that sort of stuff that often goes on in Vancouver of getting yourself set up in cheap stock. We've always looked after those shareholders, our shareholders at NextGen and at ISO. And so when we listed the company, we actually had a market capitalisation day of listing of $40 million. So it was a fairly fulsome valuation at that point in time. I think I wrote a cheque of $50,000. I suspect I've put in somewhere in the order of $300,000 over the past 3 years. And every new financing, I typically put in $50,000. I follow that thesis as well, that you want to invest in the companies where the CEOs are buying in, and we've certainly been there. Me, the management team, and board have been contributing. So, but it's never been a cheap story that you're going to get 10 or 20% of the company. It's always been a fraction of that. Unfortunately.
Yeah, unfortunately for you, though, kudos on that. I took the liberty of looking you up on the insider trading reports, and I saw that you've been buying on the open market. Last year, when your stock was sliding a bit, you jumped in there, and I think that means a lot to shareholders. So kudos to you for that. Thank you very much for sitting still for some tough questions. Good luck with the drilling, and I'm sure we'll be speaking again.
Yeah, real pleasure, Lobo. And Lobo, thank you for your time, and thank you to all of your viewers. Much appreciated.